Good evening, guys. Welcome back. It's another Thursday evening, and today we are starting something new for Not So Late Night Show. So today's episode is a bit different. Different in what sense? We are introducing a company that is not listed in Bursa Malaysia. So if you guys have been frequently our Not So Late Night shows, you would have catch us close to, I would say, 40 plus, 50 plus episodes, maybe around there. And for all this while, Not So Late Night Show has always featured companies that we think the business model is interesting, and maybe point you at the right direction on what to study and what to be careful of, and then whether it's a company that suits your investment appetite or not. That's ultimately up to you eventually when you study deeper. But all this while, KayaPlus has been featuring companies listed in the Malaysia Stock Exchange, which is our Bursa Malaysia. New year, of course, you need to set new targets. You need to set new challenges for yourself. So yeah, the same theory applies for KayaPlus. And today, we are going to feature a company not listed in Malaysia, but in the US Stock Exchange. But this company is not also a US company. Basically, it just chose to list in the US market. It's a Chinese company. The company name is called Nio Incorporation, or Nio. And some guys of you might have know this company, or if you guys haven't really know, Nio is actually a company which is in the business of making cars, and not just normal cars, but electric vehicles. So you can say that Nio is actually some sort like a Tesla, but not in the US, but coming from formed and even governed or even running its business currently in China. So later we'll go in detail on what Nio actually does, what are the good prospects, and what are huge risks that you should actually take note before you actually consider investing in a company like Nio. But as we wait for the crowd to slowly roll in, maybe I would just pass it back to Chun Beng. So I think Chun Beng, you can start off Nio. What is Nio all about, and the business model, and we'll go through everything as usual, KayaPlus style. But just today, it's Nio Incorporation. Take it away.
Yeah, I think we can go to the next slide. Yeah, but I think before we start, as like our previous practice for these few weeks, we are actually launching our first premium content or premium section called the Stock Plus, which is a hand-picked 10 top 10 stock that we are eyeing for this 2021. And then, of course, now still open for registration. If you guys are interested, please feel free to check out our pinned comment, which will be posting very soon. And then this is something that me and Jupan personally handpicked. Hopefully something useful. Really anticipate to see you joining us.
Yep, you can see the cover of the report there already. So yeah, just a snapshot of currently what is the performance of the 10 stocks that we have picked. You can see that there's red and also there's green, but thankfully there's more green than red, right? So if you're interested, just let us know. So as always, disclaimer, this is especially quite well related for this company. This is a company which is exciting, but still operating a very competitive and high risk kind of scenario. So do your due diligence. Don't just jump into it because there's plenty of hype around the EV stocks, be it Tesla or Nio or other kinds of EV companies. Right? Just do your due diligence and maybe study more after you go through our sharing, and just don't blindly buy, sell, or hold based on this particular sharing only. So Chun Beng, what is Nio?
Okay. I think there's quite a bit of information to cover about Nio. So maybe we can go to the next slide. This is actually a show. I mean, they call it as Nio House. It's some sort of experience center like Apple center in a way, but then this is showing off the electric vehicles. So some key takeaway about Nio is basically they started it off with this name called Next EV INC back in 2014. And then eventually they changed their name into Nio in 2017. And then Nio in Mandarin is called Weilan, Weilai. So in a way, if you translate directly, it's called Blue Sky Coming. Or the another way of pronouncing Weilai is mean future. So it's a way that the founder trying to tell them this is the future, and then we are the one bringing you to the futures. And then after they have started, they take quite a bit of time in terms of R&D for them to develop their first supercar called EP9 back in 2016. And then only 2017, they managed to launch their first electric vehicle that can go into so-called mass production. So can you go to the next slide? Yeah, so this is the EP9 supercar. I won't go into very details because if you're a car lover, probably you have heard of it. If you are not, probably you're only interested in about the business. So I think better we'll go into details about the business. Yeah. So this is one particular video we think is very interesting. It's a review covered by this guy called Richard Hammond. Is to cover how awesome this car is. And then if you're interested, we recommend you to take a look on this video before you check out the other products, because this will really impress you. Me personally got impressed when I check out these videos.
Cool. So actually they are making real cars, so the cars can move on. It's not a show car. So what are the types of cars that Nio actually make to make?
Yep. So this is the 4 main models that's available right now. And then, of course, if you can see their supercar is called EP9, and then they go in a reverse manner. So after that, they launch the ES8 and so on. But you can see the different, if you compare it with Tesla, is they are trying very best to build the electric vehicle for China market. Because the first 3 models they are introducing to the Chinese is actually the SUV, not the sedan that is shown in the top left corner. So the ET7, the first sedan, is only announced, I think 1 to 2 weeks back, and then it's targeted to deliver to the market in 2022, which means they are ready. I mean, this should be the test bed for them to go international, besides just focusing into the mainland China kind of business.
Cool. So I think their cars look really nice. Comparatively, I think by looks itself, Nio cars look better than Tesla.
So I think why we choose to start this series, I mean the first international stock with Nio, is because I think if we were to cover Tesla, I think it's a bit boring. I think there are a couple or a lot of people that's been covering them. But we wanted to share you an perspective that this is technically, people call it as China Tesla, but then what is really the difference in it, and then whether they are worth investing into it. So they are trying to project to the world that they are not the Tesla, and then they're trying to tell the world that they are bringing in an ecosystem that actually work for electric vehicles. Because when you talk about electric vehicles, Tesla specific, you think the facilities or the infrastructure is not ready. You need to lay out so many power stations before you can make this into a success, or even make it into something that is practical. So Nio tried to make something slightly different if you compare to Tesla to suit the China market, and we'll tell you why. And then, of course, we started off, this one of the offering come from Nio, called the Nio Power. And then because this is electric vehicles, it's all about batteries. So this is how they tell you battery is not a problem, because you can technically charge it at home by buying their power home, install it in your house, or most importantly, you can charge it like a power station. Same goes to the petrol station, but then this time you're not refueling the petrol, you are charging the battery. And then we can go to the next slide. Okay, So this is an illustration on how it actually works and how they try to tell them they are slightly different if compared to Tesla. So the very big pain point about electric vehicle is the charging time can be very, very long. Even though Elon Musk or Tesla specific have tried to make so many breakthrough that the charging time has been reducing into some reasonable timeline, meaning you leave your car to charge and then you go for a short nap or go for a sleep, then after that your car will be fully charged. But it's still very long, and then it might not be having a lot of charge station. Imagine you're staying inside a condo. But then Nio tried to approach it differently. They call it this thing power swap. Actually, it's not differently. Power swap is also a concept shared by Elon Musk back in 2013 or 14, but it failed because there is one biggest drawback about this thing is how this power swap work is basically the car drive into a station like what we showed on number as number 2. You go inside, you'll be having some machine to automatically remove the battery that you have and then replace it with a new battery that's fully charged. So just think of it, it's like your phone running out of battery. Instead of you go and charge it, you change the battery straight away. And then they are trying to tell you this is something that you can charge your car in less than 5 minutes. So you go inside, maybe go out for a smoke or whatever not, 5 minutes, then your car is fully charged because literally installed with another battery. Then this solved a very big problem, especially in mega city in China, such as Shanghai, Guangzhou, or even Beijing, because the density is very, very high. And then imagine inside a condo that you're staying got, let's say, 15 to 20 electric vehicles. Then every night you need to actually coordinate with your neighbor. Hey, this one, let me charge first. Tomorrow I let you charge. So this kind of problem will occur. But then with this power swap, it won't happen. And then you basically just treat it like my power is almost gone. Then I need to go to a station to get it replaced. But then there is a major drawback about this is to make this work, meaning you must standardize all the battery model. What does it mean? It means like now I managed to produce a battery that works. Let's say the charging capability is, let's say, 100, for example. But you need to technically turn this into a mega production, try to produce as much as possible to support all these people coming into the station and then replace it. Imagine suddenly 2 months later, you discover a breakthrough in terms of some technology. For you to replace all the battery that's been deployed or produced to all the station, it will be painful and it will be costly. So this is one drawback about power swap. And of course, they try to be nice as well because they tell you, you tell me you got this power swap station, you can charge anyway. What if I'm going to some outskirt? What happened to my car? My car running out of battery, I cannot drive. So they have this thing called Nio Power Mobile. They call it the power bank for electric vehicles, meaning whenever you're running out of power, you just need to go into their apps and say, I need help. Please send me the battery. So you can have someone literally drive to you. But whether this is effective or not is question mark, but then they try to cover you and in every single scenario. So this is something unique about Nio and very details about their power or battery offerings.
Interesting. So maybe, Jumping, you want to go deeper into how the battery swapping, or as they term it, battery as a service, how that kind of mechanism actually works.
Yeah. So when Nio tried to approach it, that they tell you charging is not a problem. It's just a matter of about 5 minutes, you can get it done. Then the biggest problem about electric car beside battery is the price. It can easily go up to a few hundred thousands ring. I don't think it's ringgit. It can go up to very, very expensive. So to reduce the barrier or the stopper from people buying electric car, they tell you you can just buy the car without the battery, and then I will sell you the battery as a service. Meaning you don't need to worry that I buy the battery, 2 years later, I need to buy a new one because this battery cannot work. So instead of having this kind of concern, no, you just pay a fixed monthly fee. It's like how you refill petrol in a way. So you can actually keep on enjoying the new battery when you go to any power swap station. And then this allow you to buy the car in a cheaper price, and also you can turn this thing into a monthly subscription thing, meaning when you don't need it, you just no need to pay. So this is very, very unique. I think only Nio offer this service.
Yeah, it's very interesting. I think this is one of the key differentiating point between Nio and also Tesla. So apart from that, in terms of their service, what kind of service? Because as we know, if you buy cars, be it conventional Toyota Proton or even Produa in Malaysia, we also try to look at what are the kinds of service that our prospective next car purchase manufacturer offers. So what does Nio actually provide as a service to its clients?
So Nio is trying to tell you one thing: you buy from me, you're not buying the car, but you're buying the service. It's like when you buy Apple together with Apple Care, but then this Apple Care is complimentary gift to you for lifetime. So meaning when you drive away this car, if anything down, don't worry, we are behind you. So this is how they try to reduce all the barrier that people have on electric vehicles. Expensive, hard to maintain, very long charging time. This is the 3-step Nio tried to take on and say we are different and we understand the Chinese market more if compared to Tesla. So this is the 3 things that they offer lah.
I see. That's very interesting. So basically QA, maintenance, and also lifetime free roadside assistance. So basically covered all the concerns or most of the concerns that a car driver or car owner would have. So let's also go into the more technological kind of service or benefits of a car that like Nio is offering. So what do they actually have inside Nio?
Yep. Of course, this is the first time you will see something that is without the Nio word called Normie. So basically, Normie is some software that can install inside your car to help you do some navigation. It's like an companion app, but then installed inside the car. But then the more important one, they are trying to call this thing Nio Pilot, is a step for them to go into driverless car. So it's quite interesting, but of course, now it's in the conceptual stage. It don't have any real car being manufactured or go to market yet, but something that worth watching. That's why also going to the same space.
Yep. So yeah, I think Nio Pilot or whatever LiDAR if you're talking about it, driverless assistant is quite a deep topic. Basically, each car companies would be using different kinds of technology and approach to actually make driverless car a success story. So you might want to check out more in detail on the different approach Tesla is using versus Nio, which is using mobile eye technology, which is Intel subsidiary, Intel company. So good point. Which kind of approach is actually going to make driverless car a success? So what about others? We talk about Nio as a car company and the complementing service that they offer. What are the other benefits that Nio car owner would enjoy?
Yep. So when they are always into this word is I'm giving you a service and you're coming in to enjoy a new lifestyle. Yep. So they have this thing called Nio House. It's like a experience center that once you are in, you're the Nio member, you can go in there. So inside this Nio House, it's not only like a showroom, but they allow you to actually use the meeting rooms, act as a gathering spot, and so on. But I think this one is something that they try to project them as a premium service that give to this kind of member. And of course, they also work with a lot of different brand or startup to offer this thing called Nio Life. So it's quite interesting. They try to sell clothes, try to sell a small device, but then this is really something to support their brand, to tell you, I'm giving you everything from a lifestyle perspective, but we start with electric car.
Interesting. So what are the key info about the company? Talk about how the company operates, what the company sells, but what are the additional information that we should actually look into besides the electric cars that the company makes?
Yeah, so if you are into Nio, beside all these cool demo video that you can watch, actually this is the 2 key takeaways you must know about Nio before you decide to study further. So the first thing is Nio technically don't really own the manufacturing facility. They work with this China state-owned company called JAC Jianghui Automobile Group as their manufacturing arm. And then they enter into some very interesting agreement is they sort of give some guarantee return, meaning they sign this deal, they ask them to produce the car for them. If because of this, and their operating turn into losses, as in JAC turn into losses, Nio need to cover the losses. So this is technically a very not so good signal about the company. But then it got reduced because eventually Nio is actually some kind of state-owned. So it's quite interesting why this is not an issue anymore. Is because I think early last year is a tipping point or turning point for Nio. Because before that, Nio almost went into bankruptcy. They're running out of cash flow. In some huge debt, they need to declare bankrupt. But then, due to the fact that China government trying so, as in they put a big agenda about electric vehicle target in the national level. So this state, one of the state, have decided to invest in Nio. This state is called Hefei, and then eventually they own 24.1% of it. Good and bad. Good means state-owned. Whatever deal that you have with this JAC shouldn't be a problem because technically is some government power behind it. But bad thing is maybe it will restrict somehow the way for Nio to attract new investment from other country. Because from the historical perspective, China government tend to be very, as in they wanted to control the whole thing. So unless you try to invest in to capture the market or try to actually win the potential that electric car inside China, else you won't really go into it because you can't really control the future of it. But of course, in another way, you can see it like I always see this Nio like the Huawei. But the electric vehicle version, Huawei technically is also state-owned in a way. And then when we mention state-owned, it comes with a lot of advantage, meaning the government itself will throw in additional efforts to try to make it a success.
Well, it also comes with a little bit of additional disadvantage.
Yes.
See how Huawei gets blacklisted by the US government. So these kind of things, you really have to take a pinch of salt from the pros and cons of being a state-owned company, but very interesting kind of way to take a look at it. So I think we come to the figures part, the numbers. So this is not your typical kind of company. We covered some very stable companies back in Malaysia stock market, but today this is a very exciting company. So you see this company, I think they started operating in 2017 or early 2018. You can see in just 2017, no sales, zero revenue. And I mean, even though you haven't sold your first car, you have to deploy capital to employ workforce, to pay for salaries and build your team, right? So straight away, the company reported losses already for 2017. And come to 2018, yeah, they started to make their first few cars. They managed to sell it. But you can see that the loss deepened. Basically, they were undergoing a very kind of huge kind of expansion. They hired more people. They also hired more workforce, skilled workforce to actually roll out more vehicles and sell out more vehicles. So it went into a even bigger losses. So from negative 7 billion renminbi down to negative 23 billion. 2019, you can say that sales almost doubled from 5 billion to around 7.8 billion, but the losses were still there. And as of trailing 12 months, I think the company actually managed to recover after they got into some debt crisis, where the state-owned government pumped in additional capital. They managed to sell more cars, and then you can see the operating losses actually narrowed down from 11 billion renminbi to 6.5 billion renminbi. So maybe a turning sign or maybe not. Yeah, I think this is still a very new company where you cannot just judge it based on just one quarter or few quarters change, because this is a growing company that will eventually still report losses as it reinvest its profits. So some key quarterly data that could actually excite you. So this company actually grew around 146% year on year. So you start off as a new car company, and you sell a first car. When you sell a second car, straight away it's 100% gain. So you sell a third car, it's a 50% gain on top of the second car. But when you are small, young, and agile, you tend to see very aggressive and very out of the blue kind of a growth rate. But eventually it will normalize. And if you are buying into the growth story of Nio, you should actually ask yourself what is the market size of the current China market, because it's currently still a predominant China-based EV maker. So what is the opportunity there for Nio, and will it still run into potential debt crisis that it actually just overcame last year? And some good signs that you can actually see that you can see that the vehicle margin actually improved. So in 2019 Q3, it was still at a loss in the vehicles that we're selling in terms of the margin. Then it went up to 9.7, and as of the latest Q3 2020, it went up to 14.5. So quite positive in a way. There's a positive trend, but we still need time. Personally, I would still want to spend more time and monitor the company's upcoming performances, because this is a very new company, and you cannot just take a slight of improvement as a definite bet that the company is already on a correct track. So still in the loss-making mode. Definitely the company was spending a lot of money in R&D and also in sales and marketing. You see that Nio Life, all these kind of complementary services is money. The company is spending it on behalf to grab market share, since the EV space in China is so competitive. So you won't see that the net loss attributable to ordinary shareholders showing a profit or positive sign anytime soon, because this is where the company needs to be aggressive in building their market share and sales. So one of the key aspects or key points that you have to note or look at when you come across a company like Nio, because the company has been on the news previously, going through a terrible time, getting into debts that it couldn't service. And you can see even as of now, trailing 12 months, Q3, the debt is still at a very high level, around 9.8 billion renminbi. And the cash on hand, of course, went up to 22 billion because they just got saved when the state-owned government injected some capital to actually make sure that Nio can continue running and operating. Right. And of course, they put their cash into good use. They managed to finance whatever they need to finance, and they actually continue to build on the expansion plan or the expansion dream that they are currently setting on to become one of the key EV manufacturers in China. So yeah, you need to really monitor. At any time things go bad, they might be asking rounds and rounds of capital from various parties. So just like Tesla, I think Tesla, if you follow the growth story, basically Elon Musk also raised a few rounds of money or cash capital injection via rights issue, so that it became the company it is today. Today, as of now, it's a profitable company. So some important things that you might need to take note is that who are the investors or who are the major shareholders of Nio. So we talk about how prospective and how promising this company is towards changing the trend of electric vehicles in the world. So you can see that one of the key shareholders is Li Ping or William Li. So William is actually the founder and one of the, I think he's the CEO of Nio Inc. So he has a little bit share there. But if you look at the principles, the one with the hard-hitting capital injected into Nio is those very niche kind of investment firms. Baillie Gifford, basically, I think it's a Scottish-based investment arm, and you also have Temasek Holdings. So if you guys don't know, Temasek Holdings is actually the sovereign wealth fund of Singapore. So yeah, Temasek also has a stake in Nio Inc. with around 14 million plus of shares. in Nio Incorporation. So exciting. And of course, moving to the valuation part of this company, this is a company that I think shares have moved up significantly after the news of increased sales, and also that they actually obtained capital injection from the government of in the state of Hefei. And ever since then, the share price has been on a bullish run, and you can see as of current, the enterprise value is around 87.72 times. In terms of price to book, is 70 times. It means this company is currently trading at 71 times more of its assets that he's holding. And of course, this is a company not producing any operating cash flow. You don't see nice cash flow. You also don't see any earnings. It's a loss. So you definitely won't see any number for PE ratio and also price to cash flow. So exciting, but growing company. So the traditional metrics of valuing are what kind of PE is suitable for this kind of industry does not work here. And it also did not work for Tesla back then. Sometimes it's just how investors who are looking to tap onto the so-called very, very interesting or very exciting kind of growth companies, you really need to use another methodology to evaluate, and it would be consider betting on the future of the company. Like, you still need to do a little bit of calculation, but yeah, I think deep down is still there's still a little bit of betting aspect over there. So maybe I'll pass to Chun Bing. What would make Nio very promising or very successful in terms of the EV market growth in China?
So when we talk about 70 times above the book value, you think it's crazy. But then if you monitor the battery price, how many percentage they try to drop on a yearly basis, it's something to justify back the valuation. But of course, it didn't drop like 2 times, 3 times, 4 times in a way. But still, it's a very promising trend that this is something that getting more and more affordable. Why the electric vehicle is technically a scarce thing now is because it's very expensive. But when it go into the point that, let's say, about 100 plus thousand ringgit that you can get it, then a lot of people will go for electric car, for example. And then, of course, the second one is all these uncertainty that come with a high growth company. When the time he can enter into a stable or focus mode, we can see it from a plus side. So that's why I put state-owned as a plus side, because finally they can do what they do best, which is manufacturing or doing a lot of R&D to making sure this electric vehicle getting more and more affordable and also more and more stable. So state-owned definitely bring in a plus point into it, but forget about those weird things like the sanction being put to them. But those things really we cannot predict. But what is assured is they are state-owned, stability definitely there. And of course, last one, EV policy is coming from different governments. If you can see it here, China is playing a very big part in this, purely because there is a lot of push from the government. They wanted to get more and more electric car into the road, mainly due to also environmentally issue. Because the traditional car just will emit a lot of CO2 that cause damage to the environment. So electric vehicle is the good alternative to solve this. China is trying very hard. US supposed to be good. After changes of presidents, we go into a president that is a strong advocate for renewable energies. So all this is very positive in the EV industry.
Cool. Yeah, I think President Biden just got swear in yesterday. So interesting to see how his upcoming policies on green energy and renewable energy pan out to the global stock markets around the world. But we also talk about how this company is risky. What are the kinds of risks that we should be aware of when we consider EV companies which are high valuation and also still making loss?
So I think the number of electric vehicles sold in China got picked up very, very fast, especially in 2020, even though during the year of pandemic, is because of subsidies. But then China has made it very clear that this subsidy will reduce on a yearly basis. If you have been following this company, you will notice they just got some form of reduction in those subsidies. So, of course, this will be eventually gone. That's why the key thing is whether the reduction of the car selling price in terms of the gross selling price can pick up with subsidies or not is a key question. Imagine the subsidy reduced, but then your car price also reduced because of your R&D, make your manufacturing line become more efficient or whatnot. So this is a lot of things need to be monitored. But the fact is the subsidy is still there, but then it's on a reducing mode. I think eventually will end at 2022 or 2023. Of course, the biggest threat for Nio is actually the competition coming from Tesla. But not forgetting there are a lot of players within China try to pick on them as well. But Tesla should be the one. Why? Because Tesla is quite smart because they actually have a factory. They call it the gigafactories that is already in production mode in Shanghai. Interesting thing is this factory is wholly owned by Tesla. It's not like how the other company works in China, because last time typically if you want to enter China market, you need to work with local players, and then you cannot do 100% on and so on. But for Tesla case is a unique one. They take this as a test bed for their people to actually able to upskill easily, and then Tesla is the one that benefit from it. And not forgetting the subsidy also given to Tesla car as well. So for China government, as long as it's electric vehicles, you get the same subsidies scheme. And then the last one is the advantage of Nio, which is the power swap and all those things. And it also can be the things that pull them, as in slow them down. Because the model, whether it's sustainable or not, we don't know. Why? Like I say, battery price reduced over the years. Also because of technology breakthrough. Now I think for Nio, they has about 160 power swap station in China, which is still a small number. Imagine you got few thousand power swap station using the same model of the battery. How you can do an effective upgrade and spend the money to renew it, that time is a time that you will get killed, and then all your profit might be gone because of that. So we don't know yet how they can make this into a sustainable model. So it's always a double-edged sword. Give you something good, something bad is catching you at your back as well.
Yeah. I think the so-called adage, nothing is perfect in the world, really does sum up. You can see it as a true case scenario or true example in this point. So we also talk about how China government embraces EV, and it has been giving up subsidies for the mass market to actually adopt the usage of EVs in the Chinese market. But you can see, even though Nio is a state-owned and is a homegrown company, and also one of the brightest one, most promising one, you can see that in terms of sales, they are growing. You can see ES6 Nio, as of February 2020, they were doing around this amount, right? And then that was during the height of the pandemic. Come July 2020, sales of every EV companies or hybrid companies also increased. But you can see that still at the top, very, very top, is Tesla Model 3. So I think Tesla still has some kind of bargaining advantage or brand appeal to the current Chinese market, that they still end up being one of the top sales vehicles, at least if you compare February 2020 to July 2020. And of course, you have a lot of competitions there as well. Not only Tesla and not only Nio is there. You also have UID. UID was previously the more successful electrical vehicles, also based in China. That was before Tesla overtook them to become the biggest EV manufacturer in the world. So you also have, what else? BYD has multiple models.
Yeah.
So yeah, I won't go through the details or the list. Basically, it's a very competitive space just because the names of these companies that are listed, maybe there are 5 of them, but if you just go deeper down, there are a lot of players out there in the Chinese market and also around the world as well. Right. So maybe we go to a deeper comparison, since most people know about Tesla and not many know about Nio, and what is the prospects or the advantage if you want to bet that Nio could actually outperform Tesla, say for example, if you want to see Nio as a catalyst, potential winner or beneficiaries in the China market. So maybe Chun-Bing, you want to compare each of the aspects that we have prepared in terms of first charging stations. How is Nio compared to Tesla, and what is the profit margin as well?
Yep. So I think the key thing is about the practicality of the car itself. I mean, you can produce a car, but so what? So in terms of charging station, they are still very lag behind if compared to Tesla, even within China. But then they have the target to actually expand it to 250 within this or next year. So promising, but then this is a fact that they are still behind Tesla. And then the next one is if we compare the quarterly growth profit margin, Tesla is also at the upside, where they are hovering at. So the purple color one is actually Tesla. If you cannot see it properly, the gross margin is about 23.5. It's gross margin, not the net margin. So you don't have the perception that wow, electric vehicles is already that lucrative. No, it's not yet. This is just gross margin. And then for Nio is hovering at 12 to 13. But then they got a very big reason why Tesla score better in this space. Maybe Jupan, you want to talk about the credit stuff?
Yeah, so basically, this Tesla gross profit margin is basically Tesla as a whole. So doesn't mean that it means Tesla selling cars in US and also all around the world. So they book their sales all around the world. And if you look into Tesla's breakdown in terms of their profit, one of the key components that is probably making Tesla profitable, apart from the economy of scale that they probably have achieved, is they do sell out tax or carbon credits to the other companies. So in US, there's this specific law that if you are manufacturing a car that emits carbon, you have to pay a significant or a small amount of tax every time you manufacture a vehicle. And this will affect companies like Daimler, Chevrolet, all the other traditional kind of combustion engine vehicles. So Tesla is a pure play EV. They don't actually make cars that drink or consumes petroleum. So they actually can sell off these carbon credits to other companies who might need it. So by selling off carbon credits also contributes to a portion of Tesla's profit, and maybe because of that, it also helps in terms of Tesla's overall gross profit margin as well. So you have to take note of that lah. So sometimes news will only just tell you it's profitable, but how many percent of it is coming from the carbon credits? How many percent is due to economies of scale? You have to dig down deeper. Right. So, but I would say positive sign for Nio that they're actually improving on their profit margins. Next, we also look at growth, since both Tesla and Nio are companies that are in the hyper growth phase of their company. How much growth is there available for both companies? So we can see that based on the well-researched, I would say, opinion article that you managed to find out, coming few quarters, Tesla is forecast to grow at around 39%. It's already a huge, one of the biggest, if not the biggest EV manufacturer out there. So to still able to get 40% of growth is still an amazing number, right? But if you compare someone with a smaller base or smaller base count like Nio, it is expected or forecasted to grow at 150 times percent versus the growth of Tesla. Yes, this is a more promising company. This is a company that is probably going to hit 3 digits in terms of growth momentum. But of course, in terms of stability, definitely Tesla is more stable. It is still in a very prospective kind of EV market where still most of our cars are operating on a traditional combustion engine. But if you want something safe, maybe Tesla is safer, definitely. But if you are someone who wants to opt for more excitement, yeah, Nio is definitely a high growth, exciting company, but not without the risk. And yeah, this is basically going into more breakdown. Basically, the revenue estimate current fiscal year versus the 2 fiscal year ahead. You can see that the purple line, Tesla is still going to grow at a significant kind of growth rate, but at the top, you're still going to have, or the bottom part, you're still going to have Nio outpacing Tesla in terms of the rounded numbers growth percentage, because it started off as a lower base lah. So yeah, you just really have to take your pick, high growth or more stable kind of high growth company. So I think I'll pass it on to Chun Bing in terms of enterprise value versus the revenue estimate. How do you rationalize the growth momentum, growth percentage versus the company valuation, since both companies are not really that profitable apart from Tesla?
Yeah, because the metric that we use here is kind of new if compared to all the things that we have shared last few weeks or even last few months. So we have this thing called the enterprise value, which is very close to what we call it the book value in a way. And then this is the trick, because they are trying to compare our enterprise value against the revenue estimate for the next 2 fiscal years. It's somewhat combination of forecasts with some fact that come up from the annual reports or some of the news source. Also combination of whether the market they are in, the receptive of the resident or citizen towards this electric vehicle. This is the sum with some sort of science behind. You can actually see if you compare the price back in December 2020. If you compare both Tesla and Nio, actually Tesla is trading at a slightly higher price in terms of valuation if you compare back to Nio. So something food for thought. Nio is because they are picking up, and then they're having a forecast of they are able to bring in much more revenue. So in a way, they are trading at a slightly cheaper valuation in that sense. But of course, this is estimate. Whether it's legit or not from the thing that's going to happen, no one knows. But of course, if you one step back, whatever data provided by Tesla should be more legit in a way because they're in the market for so long. Nio is the thing that you can go for it and you can expect a high growth. Because a lot of people talk about Tesla 2020 alone, if you buy it at 2019, you should end 7 times in terms of capital gain. So let's say you 1,000 becomes 7,000, for example. But then if you invest in Nio, it's not 7,000 but 15,000 in a way lah. But of course, can't be a lot of risk. Imagine last year they didn't manage to secure the investment from the state. It will go to bankruptcy and your stock, your 1,000 worth nothing. So this is the kind of risk you're in, but high risk, high return.
Yep. I think I truly agree with that kind of example. So yeah, also one more thing that you need to take aware of. Yes, we know that based on facts alone, based on numbers alone, Tesla is currently the market leader in the EV space in China, and Model 3 is actually one of the top selling models. But you also have to realize what is the condition of staying types of housing stays that the Chinese are currently staying, especially in the top tier 1 cities where land is scarce, and a lot of the younger generations are currently going to the first tier cities to actually look for jobs and look for opportunities, right? So when you have a more dense population, the so-called default mode to actually house more people is actually apartments and also flats. We don't talk about China itself. We also look at the current situation in Malaysia and also Singapore. Malaysia, of course, you find more condos in KL compared to your hometown, which may be in a kampong, where most people are staying at landed house. So it goes back to the kind of questions that we have to ask ourselves. So do you foresee if everyone were to buy a Tesla, and Tesla is a car that only relies on charging from a power station, do you expect that every household is able to get access to a power station and charge their car over the night, and so that when they go to work or go to wherever you want to the next day, they have a fully charged car? And you have to assume that there is one power station for everyone staying in a particular apartment. So food for thought for that. I'm not saying it won't happen, but as of now, it's not just as widely available yet in the Chinese market. So it's a headache or challenge that Tesla has to overcome. If Tesla cannot overcome, then perhaps Nio will be taking advantage to grab more market share. So if Tesla can overcome, then probably a tougher opponent for Nio to actually grow also in the Chinese market. So there you go. Very interesting company. Yeah, I think definitely one of the stocks that you should keep an eye on, but there are also other EV companies listed out there. And this was just one of the more exciting and more high risk one. Relatively lesser risk is Tesla, which is a more well-established company. So last but not least, just another quick reminder, if you are interested in Stock Plus 2021, which we will be holding next week, Saturday, Sunday, we'll be spending our weekend, not outside because it's still MCO, but going to go through 10 stocks with potential with you guys. So let us know if you are interested and sign up in the link that we have provided. And now, yeah, we'll go through the questions. Okay, so relatively less questions because this is a new company and it's not listed in Malaysia Stock Exchange. So maybe you guys are a bit quiet. But the first question, Kong Yap Kok Chung, Nio don't manufacture the EV. They don't manufacture the battery and not even the autonomous driving system. What can we look for from Nio? So there is an argument point for this. Basically, you are running your company or your business in a fabless model. You don't take part in the heavy labor or heavy asset intensity kind of portion of it. So it's just like how Apple don't make their own phone. Apple outsource the phone making components to Foxconn and other companies, and they just basically get the ready-made phones and then sell it to customers. So there's a bit of an argument there, and yeah, that is one of the benefits that you can actually choose to argue. As of now, it's very 50-50, but that's the kind of perspective you would want to look at if you want to make this as a strong point. Yes, in terms of battery, I think Tesla also don't manufacture their own battery. They actually work heavily with Panasonic to actually get their battery. So you cannot also say that Tesla has an edge over that. Battery R&D and also innovation also is another form of deep science and also deep capital and deep R&D kind of initiative. So Tesla cannot be doing a lot of things on their side. They just focus on the drivetrain and the electric vehicle engine only. And the autonomous driving system, yes, you can argue Tesla is developing their in-house proprietary system, but I think Mobileye is also quite well receptive. Mobileye, I think, is not just supplying to Nio, they're also supplying to a lot of other car companies, say for example BMW, Mercedes. A lot of prestige car manufacturers are also using Mobileye as their LiDAR offering service to actually pivot us to a more driverless car kind of world in the future. So we have someone giving a comment just on GF Tech. Return is good. Thank you for sharing. Yeah, congratulations for actually picking on GF Tech. We just share about the business model. That's all. So easy, very risky investment at its current level. Yeah, I would say so. I agree. Chubin, what do you think?
I would say we should keep an eye into this industry. Definitely something that's going to boom, in my personal opinion.
Mm-hmm.
But then it's just the level of return that you will get if they didn't go into bankruptcy. if they manage to survive, definitely they will have a very good returns in the futures. Like again, stock is all about forward looking in a summary. You try to predict or you try to think what
Yep.
will bring a lot of benefits or profit in the future, and you price it now. And eventually when you realize, then it's a time to sell lah. So now it's definitely expensive. Whether overvalued or not, it's very subjective. People say Tesla PE is about 1,000 times, meaning you need 1,000 year with the current level of sales only able to break even. But if you think about it, if they manage to grow in 100%, then your PE to growth is down to 10, still high in a way. But then if it's 100% on a yearly basis, then it becomes low. So it depends on how you see it. Personally, I think with President Joe Biden in the office, all those things is a very positive push. And then like if you go into the next question, ask about another China company that is also working on this. I always think we can refer back on mobile phone technology, mobile phone industry. Few years back, you have Apple, you have Samsung, but then now you have Tesla and not so famous from the other part of the world. Then you have Nio. Nio is very much like Huawei in my opinion. And the rest, whether they are Oppo, Vivo, or whatever not, they are still surviving until now. You just think about it. So I see it that way. I mean, they are like the Huawei, and Huawei started it off by not owning any facilities. They outsource everything. But because they're state-owned, and then they didn't go into public listed, so a lot of people cannot tap on it. But this Nio is something that you can monitor and can become Huawei. But of course, it almost died last year. So this is the kind of risk you're into it.
Yep. Definitely. So yeah, I think Xiaopeng is also one of the upcoming EV manufacturer from China. But I think if you look at the market share that sales that they are doing, it's not that much yet. So yeah, I think all EVs are high risk. Relatively lesser risk, of course, is just Tesla lah. But you would want to maybe monitor, especially Xiaopeng, Nio, and also Li Auto first. At least they have to win the smaller competition. At least their sales volume has to come up one of the top 10 or top 20. Then only you can come up with a good thesis. Because if you don't sell cars to beat your competition, then it's very hard for investors to predict that this company got potential. So food for thought. Interesting question from Hanafi. So he said that strategy-wise, is it better to bet on EV makers like Nio, Tesla, or to go with the supply chainers like battery suppliers like LG Chem or LED manufacturers like DNO? Good question. Actually, at the end of the day, it just bounds to your own risk appetite. If you're someone who cannot tolerate your stock going up double digits or also dropping double digits, then definitely EV companies are not your cup of tea. No point forcing yourself to actually buy into it because high growth, but end up you cannot sleep at night, right? So your safer bet would be to go to the supply chainers, like your battery suppliers. Panasonic is a company that has been around more in terms of years more than Tesla and also Nio. Or you want to go with something even safer. LED manufacturers like DNO, they basically make LEDs for a lot of cars. So even if Nio go bust or Tesla go bust, Mercedes is still around, BMW is still around, business is still around. So, but if EV were to become very, very promising, then definitely share price of EV makers will go higher than your battery supplies or your LED manufacturer. So it's just down to your personal preference. And that brings us to maybe the answer provided by Evans. So despite the high risk, as long as the proper stock allocation and diversification has been constructed on your portfolio, it is fine. Yes, truly agree. Straight away answer Hanafi's question. So we have one question on Stock Plus. On that particular day, you can not attend. Can you register? Yes, you can still register. all our videos, presentations, sharing will be pre-recorded or will be recorded on the actual day. And then you can view it at your own leisure. Even those who attended the live, you can also rewatch as many times as you want. And you also get the PDF copy of the report. So I think as of now, this 50 plus pages, I haven't finished writing the 10 companies. So I think plus everything, you should be looking at a report around 70 to 80 pages. So I really hope you guys enjoy it. And yes, you can register if you cannot make it on the actual day, no problem. EV is cited as one of the mega trend in the future. What's the analyst consensus on Nio's target price for this year and next? I won't comment on what the analysts are actually targeting. Basically, a lot of them are from the US market, and it's not easily accessible to us if we are based in the Asian scene, right? So you have to liaise with JP Morgan, Goldman Sachs, all these kind of investment bank. But I would want to just remind you that analysts also based on certain kind of assumption on the price target of all companies that they cover, right? So at the end of the day, not all predictions or not all price targets will come true, because you can actually assume the certain movement, the price of the company is moving based on the business and based on the potential prospects, but it's really difficult to put an exact price that the company share might arrive to. And we have seen a lot of examples during the peak of the pandemic. People were giving very, very rosy price targets for growth companies. And look where we are today. It has almost been 6 months, and the price target, even though improve kind of earnings from growth companies, you cannot just blindly assume that the price will go up because this is the kind of valuation, this is the kind of anticipation, this is the kind of judgment. And maybe also there are a lot of people participating in the growth market, so you cannot really dictate that the value or the price target will surface in the future. So this holds true also to companies in the EV scene as well. So that's why we say it's a high risk company. So I think this is an interesting company. And I don't know about you guys. Do you guys like companies outside of Malaysia? Let us know in the comments, because we plan to do this alternate Malaysia, US, Malaysia, US. And if you guys really, really like US companies, let's look at US companies more, because the fishes are bigger in the ocean compared to the lakes and rivers. This is what I can say. But Chubing, first US stock. Any opinions about this company, or as an overall?
I think just to summarize on the key takeaway, if you are late into this live, so basically Nio is a China version of Tesla, but they try to play it slightly differently by offering some of the things that suit the China market. For example, they try to turn the charging of the battery into a petrol station concept. But instead of literally charging the battery, they swap the battery for you, and then you can actually wait for 5 minutes, and then you can get your car fully charged. The second one is electric car is not affordable, and then they tell you, the big part of it is battery, and you worry about the battery life, like your mobile phone, eventually the battery cannot use. No, I give you in a subscription model, so you will always get the top quality battery as long as you pay every month. And then if you don't pay, as in you don't drive, then you don't pay lah. So this is all the thing they're trying to suit the market in China, which I believe China will be the biggest electric vehicle market in the world in the coming few years. So this is the key takeaway. They are not making Tesla or become profitable, and the subsidy that the China government is giving is applicable to both companies. This is a few key points you should understand. And lastly, Nio almost went into bankruptcy and was rescued by the state, in one of the China state called Hefei, and then now 34.1% is actually owned by the government. So this is the few key takeaway. And I think the last one is, they don't technically own the manufacturing facilities. They outsource with strategic partnership, but the strategy partner is also state-owned. So this is all the key info about this company. If you guys have any interested company that wanted us to cover next week for Malaysia market, then yes, can put into the comment. And personally, I already have one US stock in my mind on what to cover next. But it will be on the cloud side of things, I would say.
Interesting.
2 weeks later.
Okay. So yeah, I think Francis also agree, good balance with US and Malaysia. So yeah, one of our key goals of setting up KayaPlus is to, maybe just educate you guys on the stock markets available in our home country, Malaysia. But once you get whole and understand most of the good companies in Malaysia, it's really time to look outside, because we are responsible of our own wealth. You want to buy into good companies that can compound your wealth at a more effective rate, then yes, you have to look into investment opportunities all around the world. And I think that ends our sharing tonight. I hope you really enjoy our first ever US stock covered on the KayaPlus Not So Late Night Show. We'll see you next week, as always, every Thursday, 9 to 10 p.m. See you guys. Stay safe. Not so good kind of scenario back in Malaysia, but everything will actually become better if we actually do it right. So take care. See you soon next week. Bye-bye.